building these financial modeling on two things that are just totally inaccurate, and so we're not going to have an accurate plan. So a decumulation or a spending advisor who manages your investment takes on a different role. They put on a different hat. They're going to look at your plan from a written perspective of getting that statistical probability really high. And now I'm speaking to you just specifically about what our practice does and asking you to really think about, is this the kind of advisor that you need to find for yourself? You need to find somebody who knows that they need to do true financial modeling and projections, incorporating the sequence of return risk, and certainly incorporating the tax law changes that we know are coming, that we've talked about on this podcast and that I've been preparing you guys for. Just literally on March the 18th, we had the administration's press secretary announce on a press conference, I think in response to a question where she was asked, that $400,000 level of cap gains where you no longer get capital gains treatments, but you get ordinary income treatment. She clarified that is not $400,000 earnings per person, but per household. So now we're dropping the earnings to about $200,000 per person if you have a two-person household of earners, and that's a huge difference. So I'm just preparing you that the tax law changes that will be coming between now and 2030 are going to be quite aggressive. The estate tax law changes that this administration is already proposing is already something that we see a huge leap forward in aggressive tax policy. So there's a lot of changes, and so you cannot deal with solely an investment manager who doesn't have any tax expertise or tax knowledge and who just uses a financial tool that only allows you to change the tax rates 3 times in the next 3 decades or 4 decades. That is not workable. So these are all the difference between an investment manager and a true financial planner that is going to be able to reduce the risk once you're retired, because you no longer want to take so much risk, since that is your sole source of income on top of Social Security. And you really do need a written income plan, and you need a plan that is not based on 2 false premises from the very beginning and gives you a false sense of hope. These are all the things that go into a true income plan, reverse engineering a real solid tax strategy, and all of the things that advisors like myself do. And that is really going to give you a leap and bound above where you'd be if you just dealt with a true income an investment only advisor for the rest of your life. So that's the difference between